Moorlach. Please, Mr. Moorlach.
Thank you, Mr. Chair. I have a few questions, a lot of them mechanical, because I am a CPA. I practiced for 18 years, 2 decades in my first career. This is now my 4th, so I'm a little bit away, 2 decades away from preparing tax returns. So January is always kind of a, oh, here we go again, tax season. So if a taxpayer makes a contribution to the California Excellence Fund, is that a segregated fund that will have different uses, which would separate it from the general fund?
Well, I think right now it might not be, but of course the federal statute doesn't require that. Giving money to the state or an instrumentality of the state would both work. I think under the suggestions Darian made, there might be some portion of this that would be segregated funds with reimbursement to the general fund. That'd be my understanding of how it would work.
Because I'm using the model that was provided by SB227, where you did the Cal Grant program. So if I, and this is the voluntary, I want to give to Cal Grant, so I give it to the state. It's designated specifically for Cal Grants, and you did some finessing to make sure it all worked out.
Yes.
But now we're going to talk about real dollars, right? This, I don't know what Cal Grants, what that's been doing, but this proposal could be very dramatic in size if we're talking about the 1%. So I'm just trying to get to the mechanics of it, because if it's a designated gift, restricted, then it doesn't. It would be separate from the general fund, and I'm trying to figure out what as an accountant, what the budget would look like. Would I have, I've got the CEF, I've got the general fund, and then I've got the school budget, right?
Yeah, Senator Moorlach, I think what you're referring to, for example, I think what you're trying to envision is if we were to be successful and provide tax relief to Californians upon their charitable contribution to the state of California, would it go to the general state fund, or would it be some sort of lockbox, for example, designated, segregated, if you will, account that is open to capture these types of contributions? We're actually working that process out right now. I would characterize the dollars that are being made by individual taxpayers of California to help fund Cal Grant programs as real dollars. You are correct in stating that if successful in terms of the passage of the measure to provide relief for taxpayers, and if successful, obviously in terms of our reach out, so individual taxpayers are consciously aware of this option for them that would provide them the relief, we would be receiving a stream of revenue in mass. And mechanically, how would that function? We're actually working that out right now with the various options and figuring out the different modeling right now. But knowing your expertise and your financial acumen, obviously as treasurer and county board supervisor, especially during a very complex and difficult time in state history during the bankruptcy of Orange County, what feedback that you could provide for us would be very well taken.
Well, we got the professors, so I want to have a little fun. So we both know that 1% of our population is providing 50% of the personal income tax. So let's say that half of them say, we're going to send a check in to the CEF. And so that's going to be a significant amount of money. And so if it's designated and separate, as opposed to supplemental, because if it's supplemental, it's going to hurt your argument, I would think, because you're just then it becomes a contrivance. So there's got to be some kind of difference. And if that's the case, then what does that do to, say, Prop 98? Does all of a sudden Prop 98 funding, is it decreased because of this CEF? And you addressed it, Senator De Leon, with your Cal Grants bill. Is this being addressed in this bill?
money would not decrease, I should say, to Proposition 98. In fact, it would do quite the opposite. It would actually increase Prop 98. Prop 98, we have it, obviously, as you know, is autopilot. The percentage that comes to the general fund is dedicated to Prop 98, our K through 12, as well as K through 14 community colleges. So it would actually do quite the opposite. Monies would increase for Prop 98. The ability, which we haven't actually worked out yet right now, it is possible when we amend the measure next time the opportunity that's available to amend it for a taxpayer to designate whether it's higher education, whether it's University of California, whether it's the Cal State University system, whether it's healthcare, whether it's the issue of public safety, that they would like their charitable contribution to be dedicated, to these specific, programs or policies. This is something that we're actually trying to develop right now and provide creative options, if you will, for individual taxpayers of California. At the end of the day, when this is done, the taxpayer himself, herself, is made whole, as well as the state of California. So it becomes a win-win situation. But getting down more into the weeds and sort of working out the mechanics, that's what we're actually in the process of doing right now in real time.
Well, since I sit on budget and fiscal review on Sub 1, which oversees our universities and our schools, I guess I've got to be protective there, so I want to make sure that the bill doesn't disrupt Prop 98. The next question I had is, so you have a lot of high-income earners, and their taxes are just done through withholdings, so it's a W-2. Does a taxpayer have to make a check to the CEF? And if so, then if they already have maybe 100% of their taxes already taken care of through withholdings, do they then write a separate check and they get a refund of their W-2 withholdings, or what are the mechanics of that?
I imagine, Senator, that one option for a lot of high-income taxpayers would be to adjust their withholding, since they're going to be making substantial contributions during the year. So I would think that would be the major option that people would do.
Exempt. Say to your employer, I'm exempt because I'm going to cut a check.
Yeah, we work out something like that for those taxpayers, and I appreciate the comments from the representative of the CPAs to help us tax lawyers get that right.
So then, let's say that instead of my employer taking out $1,000 a month for $12,000, I tell them exempt, and I write a check at the end of the year for $12,000 to the CEF, and I'm good. But now the state hasn't gotten that cash for 11 months, right? So now my cash flow at the state level gets a little awkward because everybody's waiting till the end of the year because of the time value of money to write that check. And because it's a $12,000 credit on their 540, and forgive me for getting into the weeds, but this is how we think. So now I'm good. I've paid in full, but everyone else is making quarterly payments on their tax if they're self-employed, and they get penalized if they don't make those payments. But I wouldn't, because I waited till the end of the year.
Well, I think what you're pointing out is that any adjustments would have to be sensitive to the time the check is put in the mail. And it's an important point. I'll note overall this could be a win-win for both the state, which if the credit is less than 100% is going to get some more money. That doesn't vitiate your points, but it gives some assurance for the state, and it would be a win for the taxpayers too, albeit some taxpayers would have to come up with the other check, and it's kind of a pain. So I don't want to minimize that, but it's what we think we could do to help California taxpayers.
And to the extent that this question involves state cash flow, it seems that partially this is a transition problem, right? After the first year, the state will have a big lump of money at the end of the year so it can just organize its cash flow. But in general, as you know, at the local level, property taxes come in two bits, and there's a local cash flow problem that's managed with short-term notes. So if there was a one-year initial transition problem caused by this, there is a solution out there that wouldn't be prohibitively expensive.
So another question, I didn't see it in the documents. If I made a $12,000 contribution, and that would be on my federal Form 1040 Schedule A, would that also be on my 540 Schedule A?
It's a good question. It really depends on how the credit and deduction work. Because what your question points out is there's two benefits the state can give. There's a current benefit, which is you're going to deduct it on your state taxes, the 540, and now we're talking about an additional credit. We've got to coordinate them and decide, or you have to decide, what the right number is total. And when you get the right total, then you can decide if we're going to keep the existing deduction and have a smaller credit, so the effect of that would be the degree you all want.
So I look at our revenues. Let's say we have $40 billion in other revenue. We have $80 billion in personal income tax. So half of that comes from 1%. They pay a contribution to the state. And then if it's deducted on the state return as well, then the state stands to lose a pretty substantial amount of revenue because we've given a deduction to ourselves on the tax return. And I'm just doing some back of the envelope calculating. That could be significant. So now we've got to look at how do we mitigate that loss of revenue.
Well, I think, yes, I think that when you look at those bottom line numbers, that's going to help you judge what you want to think the appropriate level of support is.
We have Prop 63, which taxes those that make $1 million or more to fund mental health services. But if I can get a pretty significant deduction on my Schedule A, I'm going to get below the $1 million taxable income. So now that program suffers as well. So maybe as if this moves forward, maybe we look at the ramifications on how it affects other issues, in the state. So I guess maybe to close, Mr. Chair, if we start diluting what is a contribution at the state level, and the federal government watches what we're doing, which is, for a lot of people, you were seeing all kinds of adjectives described for this bill. But if the federal government says, okay, we've already raised the standard deduction to $24,000, why don't we just do it even more? Or let's just not even allow you to deduct contributions at all. Let's just, for the whole country, and then this thing shuts down immediately. And I'm just wondering if we are jeopardizing a national tax structure by trying to be clever or creative, whatever C word we want to use. And then I'm already nervous about this tax bill and how it will affect nonprofit organizations, because if you can no longer deduct your contribution, that's going to have some impact on whether or not you make a contribution. So I think I'd want to be careful how we address this thing. And so maybe, Mr. Chair, yesterday I presented a bill, and I was criticized because the bill was not surgically precise on fixing a problem. And unfortunately, my colleagues didn't want to let me move forward to make amendments on it. And it was even, even called mean-spirited, because I was fighting for landowners of mobile home parks, people that actually would maybe want to make contributions for their income taxes. So it's sort of funny that I was going after cheaters, and how dare I. But this bill is nowhere close to being surgically precise. So that's where I'm having maybe a wound here, Mr. President Pro Tem. But Senator Laura even went after me last year for going and defending millionaires, and said, boy, thanks for taking care of those that, the yacht owners. And it was a fun time. So it's, let it go. But it's sort of, it's kind of like it's rich that you guys are trying to help the wealthy now in California. So welcome aboard, maybe to use. So with that, I guess to make a commentary, thanks for being worried about facing higher taxes. That didn't seem to be the attitude last year in California. So with that, I'm having real difficulty as one practitioner or former retired with the contrivance component of this, and so I'm going to have a tough time with this bill. But thank you, Mr. Chair, for allowing me to have a little fun with the professors as bookends for the President Pro Tem.
Thank you so much, Mr. Moorlach. We have the Vice Chair who would like to be able to make a few comments. Mr. Pro Tem, would you like to respond?
I was just going to say, and I do appreciate our good friend from Orange County's remarks, and do respect very much, although we are, we find ourselves with opposite perspectives and viewpoints on a whole variety of issues. I've always much admired his fiscal acumen. We just have a different approach in how we go about doing it. But what I would say is that I wouldn't necessarily characterize as those individuals who would benefit from this SB227 as quote-unquote being rich, but rather, those from the middle class as well. In fact, a large number of middle-class folks who do use the SALT, the state and local tax deduction on their federal returns, they would benefit greatly. With regard to nonprofit agencies, 501c3s, the charitable contributions, because of the almost evisceration of the SALT by the Congress and by the White House, individual taxpayers in California will actually have less money to contribute to nonprofit organizations. The idea that the Congress statutorily may eliminate charitable contributions altogether at the national level seems to me a little far-fetched or very much far-fetched, quite honestly. There's many charitable contributions, folks on the left, folks on the right, points in between, that people have enjoyed historically giving. It's been part of the history and tradition, part of our culture in this nation. I don't think that's going to ever be the case where, that the Congress statutorily will ever eliminate 501c3 charitable giving to nonprofit agencies. So that was just my commentary. But again, I respect very much your acumen on a whole variety of issues as it relates to the fiscal aspects of the fund, the general fund.
Thank you very much, Mr. Pro Tem. Madam Vice Chair.